Hello everyone, this is Spencer with Numbers Up Finance. Today I just wanted to go over the market narrative that we're seeing. There wasn't a whole lot of very significant price movement today, but I just wanted to go over what we've been seeing in the markets, the trends that we've been seeing, and how the past 2 days have they've been opposite of those trends that we've been seeing. But I mentioned yesterday what we touched on with this daily candlestick chart. Is that for the first time in a while, we formed a candlestick where it made neither a higher high, nor did it make a higher low. And that pattern continued today. Very marginally, I'll admit. You can see that the low on this candlestick is just barely below the low of the day before. Same thing with the high. It's just barely below the high. And I don't put a lot into the significance that we're lower than where we were yesterday. The important part to take is that we're not higher than where we were yesterday. And basically what I mean by that, the trend that we've been seeing with these daily patterns is that we see periods where we have nice strong buying, nice move up, a couple percentage points, and then we get a day leg down where we drop a little bit, a percentage point or two. But these dips have been met with very strong buying. You can see here after this day that we had a nice another leg up. And again here you can see that we gapped down, but that very significant gap down was met again with very strong buying up. And if you were a bull after yesterday, what you were expecting is that that same pattern would be continuing. You buy the dips, the bulls buy the dips, but that did not happen today, as we did not push any farther past than where we were yesterday. And so it's just interesting to note that the patterns that we've been seeing are not continuing. Now that doesn't necessarily mean that we're moving down, but it's just an indication of where the markets are at the current moment. And so continuing with this theme of the narrative in the market, bulls versus bears, and this is again the daily chart for SPY, the S&P 500. But we can see this purple line has been doing a bang up job of indicating the tops and the bottoms of the near-term swings that we've seen. So what this purple line is, it's a volume average, it's a volume moving average of the past 4 ticks. So every point that the purple line is on, it represents what the average volume was over the past 4 days. So it's a pretty fast moving study. But basically the purpose of showing you this is I wanted to show you how volume has been matching with price action. We can see that when volume is at its highest or its relative highest, that's generally associated with a bottoming out in the markets. Likewise, when when the volume is at its relative lowest, that's also been matched with the tops in the market. And this pattern plays out a lot. You can see the volume was at a relative low there. The slope went from being downwards to being upwards. And you can see that this was right on the very peak of the market. And then opposite of that, when the volume was at its relative peak, where you can see the slope was going from upwards to downwards, that was again spot on with pointing out exactly where the bottom of this price action would be, indicating that there would be a reversal. And what we just saw a couple of candlesticks ago was this volume average started from pointing very much so downwards to reversing, where it's now pointing upwards. And so again, no indicators 100%, but it's pretty strong indication that at the very least the market conditions over the past couple of weeks are changing. And so yes, I am currently positioned short. And I think tomorrow's a pretty significant day for how this is going to play out. And so now we're taking a look at the hourly charts for SPY, and again, there's not a whole lot that was pretty significant on Wednesday's price action. But again, it's just the exact same thing that we've been touching on. We've had this multi-week trend line, this multi-week wedge pattern that we've been forming. And on Tuesday, it finally broke down. It broke down fairly impulsively, where we broke below this trend line. And then Wednesday morning, we came back up overnight. We gapped up and then tested right off it before shooting down again. And so again, that's obviously a very strong sell signal. We still maintain the bearish divergences on the 1-hour chart, where we were making higher highs, but the momentum was going down. And so yes, that's absolutely a sell signal. But again, the trend that we've been seeing for the past couple of weeks is that these dips have been bought into, and while it wasn't bought into on Wednesday as the bulls were probably hoping that it would be, It certainly can be bought into Thursday or Friday to close this week. And so your analysis has to be dynamic. And look, what happens, maybe on Thursday, the bulls come out very strong, they swing very hard, and they push back up above this trend line. That would likely mean that this was just a bear trap that squeezed out some weak-handed longs and brought in some shorts. But what will happen is if we push back up, those shorts will get stopped out. And we might see a very strong impulsive movement to the upside. Now, I'm not favoring that whatsoever. Don't be mistaken. I'm still favoring that we pull back down at least to this yellow trend line over the next couple of days to the next week or so. But it's certainly a possibility that this is just a bear trap and that there's more room to move up in this large movement that we've had. And taking a look at the NASDAQ 100 charts, you can see the exact same thing. Not a 3 week, but a multi-week trend line that has 3 tests off of it. It broke down Tuesday, and then this morning, just as we saw on SPY, it came back up and tested right off of it. You do like to see both indices moving together, both major indices, the NASDAQ and the S&P 500, when you're making a trade. Usually when one of them is moving separately from the other, that's not necessarily a signal that like it's a false movement or whatever, but you generally like to have both of them moving in the same direction and showing the same sell or buy signals, which is exactly what we see here. But again, the overwhelming trend that we've been seeing is that the bulls have been buying into it. And while it looks like that trend might be breaking, there's still a very plausible possibility that this is just a bear trap and that we're going to get faded out. But I'll say it again, I'm currently positioned short. I think the risk to reward is very favorable going short. Look, even if we go up and we break this trend line again, you're only risking about, a percentage and a half versus the couple percentage points that you stand to gain if this is an actual short opportunity. So I think it's very favorable to go short right now. No trade is going to give you 100% win rate. It's just about managing the expected value that you get of the individual trades, and I think it's very high on this trade going short, which is why I'm positioned that way. But I'll leave you guys there. If you like the video, please leave us a like and comment and subscribe. Share it with anybody else that you know is into trading. Greatly appreciate it. If you have any criticisms or comments or compliments or whatever, we're all greatly appreciated. But until next time, make sure you keep your numbers up.